Welcome to the special interview section of Crypto Connection 2021. My name is Kapil Rathi, CEO and co-founder of CrossTower. We have an incredible line of panels and sessions coming up today and tomorrow. And I want to congratulate Tap Forum and Global DCA for organizing this event. And we have assembled a great line of speakers. Gabby, Bruce, and many others at Global DCA and Tap Forum have done a remarkable job in organizing this conference. So as Bruce said, hope you stick around and enjoy this conference. With that, I am honored to kick off this conference with two amazing thought leaders, role models, influencers, visionaries, and probably mentors to many of us in this industry. Let's welcome Mark Cuban and Mike Novogratz. Mike, Mark, thank you for joining us today.
Thanks for having us.
Yep.
All right, let's jump right into it. So Mark, I'll start with you. The big question from last week coming out of Miami is El Salvador looking to grant Bitcoin the status of legal tender. According to Nayib Bukele, the president of El Salvador, if 1% of Bitcoin is invested in El Salvador, it will increase its GDP by 25%. There is also now a speculation that Paraguay is looking to be the next to adopt Bitcoin. On the other hand, our former president, Donald Trump, yesterday called Bitcoin potentially competing against US dollar. So Mark, what's your take on this? What does it mean for US dollar? And what if more countries start adopting Bitcoin from here?
First, I don't think it means anything for the US dollar. Second, in terms of El Salvador, the devil's in the details, right? I haven't dug in to know exactly what they're actually going to enable. Is it just semantics? Is it just a marketing push? Are they actually going to do something? Are they going to buy Bitcoin and put, and have it in their treasury? So until we know the specifics, and maybe they're out there and I just haven't caught up with them yet, it's really hard to extrapolate anything from it. And in terms of what Donald Trump had to say, whatever. Again, the devil's in the details. I think just generically, we have to make sure that this isn't just press release frenzy. And obviously, there's no buying frenzy from this. And I think maybe, Bitcoin is evolving to the point where, it's no longer buying the rumor, selling the news, or at least I hope it is. And it's actually, okay, what's it being used for? And the actual tactical things that are happening move the price as opposed to just discussion and press releases.
Cap, let me take a shot at that as well, because I think it's important to differentiate, the developed world, the G20 world, from countries that don't have near as much stability in their currencies, right? So if you grew up living in Argentina or Venezuela or many African countries, right, you can, think of Nigeria or Zimbabwe, the hard work, day in, day out hard work gets burned away with big currency devaluations. Matter of fact, some of the great currency traders in the world came from places like Argentina because they learned, or Brazil, they learned how to deal with hyperinflation and devaluing currencies. It's a brutal scourge if you live in one of those places. And so Bitcoin in that world is really seen as an unbelievable store of wealth, and sometimes even operates as a currency, partly because their own currencies are under such duress. In the West, where the dollar, here in the US or the euro, we have worries that our currencies are going to devalue slowly. But we don't have worries at this point that we're going to have a hyper devaluation. And so most of the people I speak to, hedge funds, real money investors, they're buying Bitcoin as a store of value, as a digital gold. And they're buying it because there's a rising possibility or probability that our monetary and fiscal mess will lead to that Minsky moment. I don't think anybody is cheering for the dollar to become the Weimar dollar, or the Zimbabwe dollar, right? And nor do we think it's going to happen. And I would tell you, the regulators in most big countries are okay with Bitcoin as a store of value, right? We have a right to store our value in lots of things, if it's real estate or gold or Bitcoin. They're not okay with Bitcoin as money, right? The sovereignty of the dollar or the sovereignty of the euro is really, really important to them. And as long as they're, keeping the volatility of those currencies kind of 10% or less, I think they're going to feel like, guys, what are you talking about? Things are completely fine. And so to me, it's important for the Bitcoin community to focus the conversation, certainly in the developed world, on store of value. Because the moment you start talking about Bitcoin as a decentralized money and currency, regulators, their smoke starts coming out of their ear, their eyes light up. And same thing with politicians. And so a little of this is tactical and strategic, and a little of it's just practical. I don't use Bitcoin to buy pizzas,
right?
Or suits or beers.
Bitcoin as a currency, there's many, right? Put aside the transaction and memory side, all that kind of stuff, right? The real challenge is you can't organically earn Bitcoin unless you mine it. And there's just not enough of it being created for a country, a city, let alone, the world to organically use it as a currency. There's $8 million in transaction fees generated by Bitcoin, give or take, on a daily basis, as it currently stands. And that's just not enough for people across any city, let alone a country, to use it organically as a currency.
Right. Yeah. So kind of staying on countries and sort of how regulators are reacting to this. So, Mike, there is a lot of ongoing discussion at SEC talking about introduction of crypto regulation, likely by introducing legislation into Congress. However, on the other side, of course, you and I have been in the trading world for so long. We have seen over-regulation is never good. It could potentially inhibit innovation. It could move jobs, other benefits, and offshore, and to potentially put the U.S. at a competitive disadvantage. How do you think U.S. government specifically should balance regulation without slowing down innovation?
Yeah, that's a great question. Listen, we've got a new head of the SEC, Gary Gensler. He is very crypto literate. He's a very smart man. He taught a class on crypto at MIT. And so I think the big positive is he's going to address these issues. And I think addressing the issues is a lot better than not addressing them, right? The old chairman just didn't want crypto to be part of his legacy, one way or the other. And so I would say that's a positive. If you've listened to what Gary said in his lectures, and they're online, he was very clear. He said, listen, we want to allow small companies to kind of push the edge of the rules a little bit. Like, that's how innovation happens, but not big companies. And I remember asking him, I was like, am I a big company or a small company? I got to be big. And so at Galaxy, we don't break any of the rules. But, in terms of, what's a decentralized security? What's a security offering versus not a security offering? I think those things will be clear within the next 6 months. I think we'll end up getting a path to an ETF, certainly by the first quarter of next year. I do think Gary's going to look at the crypto exchanges, which really are broker dealers, and say they have tons of customers. They've got tons of retail customers. Maybe they should have some oversight. And so if you're Coinbase or Kraken or any of the broker dealers / exchanges, I would probably be preparing for some regulation. I think the big lenders, right? Celsius, BlockFi, they are non-bank banks, right? They take in deposits and they lend out. We have lots of non-bank banks. We have them in hedge funds. I'm guessing if the SEC is going to look at how much leverage are they taking, what's their asset liability match, and does that feel like it's safe for retail consumers? Remember, his mandate is to try to understand the system and make sure the retail consumer isn't going to unwittingly, get snookered into something. And I know that's a counter to the ethos of the libertarian crypto community who says, hey, my money, my decision, right? My money, my choice. The AMC crowd right now, or the they're making lots of money today in Clover and AMC and GameStop. And the classic regulator saying, what's going on? And so there's a tension there, but that's his job. And so you can bet he's probably going to do some of that.
Yeah, I echo that. I think as part of, I've been helping build regulated exchanges for past 20 plus years. And one thing I have always learned from regulators is it's not about stopping new development in trading world. And for us as exchanges, it was a lot about protecting individual investors. So I think as long as the SEC continues taking that option, and you talk about exchanges kind of should be coming in, seeing this from a regulation perspective, and obviously at the risk of plugging CrossTower, but what the hell? That's what we're building. We come from a regulated background, and we're seeing exactly the same way where SEC and other regulators are going to shape this industry. So thank you for that. Mark, do you want to add anything on that from a regulatory perspective?
What Mike said generally, I think Gary's smart. He has one of my favorite. He uttered one of my favorite all-time lines. I use all the time. The risk doesn't leave the system. It's just a question of where it goes. And so I think Gary's going to be very smart. But the SEC has one fundamental problem that I hope Gary will change, and the entire crypto community has to stand up on, and that is the SEC creates regulation through litigation. In other words, they won't do anything that's bright line. It's very easy for them to publish bright line rules about insider trading. They choose not to because they prefer to litigate. My hope is that they don't do the same thing for crypto related regulation, where they'll just start filing suits as a means of setting regulation, because it's going to be expensive, it's going to be scary, and it's going to be a real expensive problem for centralized exchanges in particular, as Mike mentioned, but everybody who's looking to get involved. And so I think the community needs to really stand up and demand bright line regulation. Say what you mean, write it down so we all understand exactly what's going on, because it's such an innovative community. Once we know what the rules are, then we can deal with them and continue to innovate. If we don't know what the rules are and we have to wait for the outcome of lawsuits, and we're concerned where the next lawsuit may come, you're going to stifle innovation significantly, and that's what's going to be the greatest problem. Not what the regulations may end up to be, but the path that they take to create those regulations.
That's a great point. I mean, if you think about the Ripple lawsuit, right, that the SEC brought, basically saying Ripple issued a security that failed the Howey test. They had allowed that to operate literally for 4 or 5, 6 years, and then they sue the week before. Chairman Clayton is leaving. Just seems strange. And again, if there were rules that were clear, or if you were going to sue to sue, but before you let an entire ecosystem get built up and then sue, it just seemed to be so counterproductive.
The problem, the SEC doesn't care about what's productive or not. That's why, more than half their employees, I think it is, are lawyers, right? There's a YouTube video I did 5 or 6 years ago where I just called the SEC and said, I have a question. I want to know if I'm allowed to buy this stock or not. Is there anybody who can answer it? And I identified myself. They know I'm not a fan of the SEC. And after a couple calls, and they returned my calls, they sent me to a website, and this is 5 years ago. They sent me to a website where it asked that you fax 8 copies of your question, and maybe they'll get back to you. They need to be responsive. Not only do they need to create bright line regulations and bright line guidelines, but they need to be responsive to the community. You can't just point to a website and say, fax your questions, nor can you not have people in place that can answer questions so that business can move forward. If we look at what happened with the internet 25 years ago, there was an intent not to slow down the internet. And I think we need to educate regulators across the board that this is the new internet. This is a new opportunity that can have as great an impact, if not greater, than the internet. And if we stifle it, we'll see what's already happening. The investments, I'm sure you see the same thing, Mike. The investments we're making now aren't in U.S.-based companies. They're in foundations in Singapore, Taiwan, or Hong Kong, or Israel. They're not U.S.-based, and that's a real problem that's costing this country, potentially billions and billions in tax dollars.
Yeah, I can see your point, Mark. But however, somebody who has worked with SEC for 20 plus years, as I saw the advancement in electronic trading, there was a good industry and regulator partnership in evolving some of the new regulation.
We're going to disagree strongly on that. The SEC is a mess. It's been a mess for generations, and they need to get fixed somehow, some way, and hopefully Gary will be the person to do it.
All right. I think we will have another panel on that. It will be really interesting, you and I discussing two sides of the coin. Anyway, so let's keep going. So again, staying in DC here, Mark, a few weeks ago, we saw, I think that was a couple of weeks ago, we saw all the tier one bank CEOs, Jamie Dimon, David Solomon, Citibank, Wells Fargo, they all testified at the U.S. Housing Committee of Financial Services. And most of them, I think it was Brian Moynihan from Bank of America said, they won't conduct any business with companies whose primary business is cryptocurrency or the facilitation of cryptocurrency trading. Jamie Dimon said, Bitcoin is not supported by any asset, and I do not believe it has any value. Now, the question, first, do you believe that the banks are being actually honest, that they do not support cryptocurrencies? And if it is true, what does this mean for the primary audience of this conference, institutions?
I mean, I don't really care, honestly. I mean, when we started the streaming industry and I would go talk to television executives, they would laugh at me. When I started the first high definition TV network, and I said HD is going to take over, they pointed me at their televisions and said, these things have been working for a generation, and they laughed at me, right? And people in traditional banking, it's becoming a nervous laugh. They don't have, there's going to be plenty of places around the world that will take deposits from our cryptocurrency oriented companies. I'm not worried about that at all. What I am worried about is how quickly we can disrupt them and put them out of business. If they are going to be in the way, crush them. And that's just the way legacy businesses operate. I know Mike's been in technology a long time. I've been in technology a long time. The landscape is littered with companies that used to be big in the technology world that got stepped on. And banks are, if they bury their head in the sand, which I don't think they're going to do actually over the long term, I think they're just trying to buy time and trying to position with regulators. But if they do bury their head in the sand, they'll get run over.
Yeah, listen, first of all, the statement's not true, right? I mean, I just paid 8 digits in fees to, one of the biggest banks when we did this BitGo merger. And so they were very happy to take my, 8-digit, fee structure. We are getting brokered or banked by multiple of the 5 biggest banks. We've got a joint venture with Morgan Stanley selling a Bitcoin fund to their wealth clients. And I can tell you that every big bank that you mentioned, Goldman Sachs, JP Morgan, is in the hopper with that exact same product. And so they are getting engaged, certainly in buying and selling Bitcoin for their wealth clients. Most are going one step further. How do we start trading it, right? The banks aren't stupid. As the stablecoin business explodes, and it will explode, people are going to trade dollar stablecoin for euro stablecoin. So if you run a foreign exchange business, you better be able to actually accommodate that, or you're going to lose more and more of your business. DeFi has the banks scared, and it should have the banks scared. I've had lunch and or dinner with, 2 of the top guys in the city in banking, and the entire conversation was about DeFi, right? I mean, if you think about what DeFi is, it's a driverless bank. It's a driverless insurance company. It's a driverless exchange. And once the KYC piece of DeFi is solved and figured out, and it will be solved, right? The regulators can't regulate code. They can regulate who uses it. And once I'm allowed to use it because I know the person on the other side of the transaction has been KYC'd, who are they going to regulate?
Yeah.
So I've got a huge intuition that 5 years from now, the banks will be like, God, that damn DeFi is just destroying our, parts of our business. And so the smart ones are going to try to innovate and, and be part of the revolution. And we'll see.
Yeah, I think it's going to be interesting. I agree, Mike. And, I've had many discussion with big players in the crypto industry about buying bank branches and leveraging their establishment within communities so someone can walk into a bank branch and open up a wallet/bank account and be pitched DeFi services by that by the new owner of this banking institution because it's trusted. And now all of a sudden somebody's walking in and they're making 4, 8, 10% on their money in a savings account, quote unquote, as opposed to 0.02%. It's inevitable, and as that writing becomes stronger on the wall and brighter on the wall, they're going to have to respond or they're just going to get run over. So I think, it won't be so much banking not reacting. I think the first step is going to be traditional crypto companies or the bigger crypto companies buying bank branches that otherwise would be closed down, keeping those loan administrators and keeping those tellers and transitioning them to crypto tellers, if you were, crypto loan administrators, and being the educational piece that really moves it into the mainstream. And when they start seeing those branches more profitable, more effective, and bringing in customers more quickly, I think they're going to be forced to change at a local level as well.
Right. So I'm glad you both mentioned DeFi. Mike, our audience here is institutions. I'm sure there are some pension funds, asset managers, macro funds. Can you break down DeFi a little bit from an institutional perspective? Like, of course, it's very popular in the crypto community, but lack of KYC or institutional grade infrastructure in DeFi. How do you think institutions can actually participate in the DeFi?
Yeah, so I mean, DeFi so far has been really I'll call it a venture sandbox, right? They've been ecosystems that are working within their own ecosystem to make, in lots of ways, it's an amazing test run to see that this stuff works. There have been a few cases, I think of, Terra Luna with the Chai payment system, where you're leaving the venture sandbox to the crypto sandbox, right? That's a payment system that's used in Korea by now 7 or 8% of total payments. It's processed on a blockchain. It's got a stable coin they use. And, it's the Terra blockchain. So it's a federated blockchain, very similar to, say, Solana. Not as decentralized as Ether, but decentralized enough for people to trust it. And that's actually having real use case. Most of the stuff isn't yet. Institutional people don't feel comfortable in mass using DeFi because of KYC, right? So we're big investors in it. We don't use it that often. There's certain pieces we'll use because we're not clear. Will FinCEN or the other regulators say, if you don't know who's on the other side of the contract, are you violating your KYC obligations? As retail people, they say, listen, I'm not trading against any, but I'm trading against the smart contract. And, the SECs or the regulators aren't going to come knocking down the door of, Mr. and Mrs. Smith in Poughkeepsie, trading their DeFi. I said that in my last answer. This problem is going to get solved. There are lots of smart groups working on it. Spring Labs has got a solution. There are like 3 or 4 people that I know of, and I'm sure tons I don't, are really working on solutions. Aave is going to have a walled garden DeFi, profile almost. And so pretty certain peer-to-peer cutting out the exchanges is going to be a big deal. Think of something like Uniswap, right? If I'm the CME or I'm ICE or I'm the London Stock Exchange, any of these big exchanges, they have tons and tons of legacy regulation, tons and tons of legacy technology. They're going to be competing against computer code that gets worked on by a community. It's faster, it's more efficient, it's cheaper in the long run because it's new. So you got 21st century, technology versus 20th century technology in lots of ways. You also have this desire, especially from younger people, but I think from everybody, to not pay the rent taker. For me to trade directly with Mark as opposed to trading through the CME. And if they can amass enough liquidity, right? We go to exchanges because that's where the liquidity is. if these decentralized exchanges can amass enough liquidity, they have a very good shot of replacing the traditional exchanges. And that's the same thing for every part of the market, right? For the interest rate market, for the insurance market, all kinds of markets are going to go peer-to-peer.
It's kind of interesting. I spent 20 years in traditional exchanges and saw that writing on the wall and jumped off that boat. Just moved into crypto. Let's make it a little lighter. Mark, you are a big holder of Dogecoin. Of course, there are controversies, people calling it a meme coin. So if I ask you to help me sell Dogecoin to a pension fund, how would you do that?
I wouldn't.
Don't worry about it.
Yeah, I wouldn't. Dogecoin has evolved, and Mike mentioned community, and crypto is all about community, and community is a strength for any particular cryptocurrency. Just look at the conference in Miami this past week that defines a lot of the value. And, it's no different than what's happened in traditional stocks. The stronger the community around a particular stock, the more likely that there's going to be some price appreciation over the period as the strength of the community grows. And if that community declines, the price will decline. I wrote blog posts on stocks 15, almost 20 years ago about, one of the first things my broker told me when I first started getting into stocks was get long and get loud. There's a reason why funds go on CNBC to pitch their book, right, and talk about their stocks. And there's a reason why someone's talking about a stock and you can watch the price appreciate in real time as the ticker goes by. And the value of Doge is built around the community. And then that community, can it create utility? And the reality is with Doge, BitPay accepts it. We accept Dogecoin through BitPay at the Mavericks. And, we've had our sales grow. The sales growth rate isn't as strong now, but our numbers continue to go up during our season, which unfortunately just ended. It's more and more people spent their Dogecoin on Mavericks merchandise and across other places. And once something gets utility and it's actually being used, then you get the chance to reevaluate it and look at the current state. And if you look at the current state of Doge, I don't know what it's doing today. It's obviously declined significantly from its highs like all other crypto, but the utility is still there. And then you start looking at the details of it, look, there's not a lot of development. There's not a lot of change. And I think that works in its favor. There's 5 billion Dogecoin minted every year, and it's limited to that. That's controlled inflation that declines as a percentage of the total available number of Dogecoins. I think that works in its favor in its utility as a potential currency. And so what started off as a joke has developed such a strong community that has created utility for Dogecoin. So while I may not say that a hedge fund or a institution should necessarily invest in it, I think, people looking for a cryptocurrency that they can learn from, that they can use, wherever BitPay and other gateways are available, the downside is very limited and there is upside. And so I think it's not a bad way to dip your toe into the crypto universe.
Well, let me take a shot. Mark hit on something. So what Bitcoin did psychologically is it sold this idea that people could come together and create magic internet money, right? That we could vest value in something other than what we traditionally had vested value in. And so now you've got 150 million people around the world that have a belief system around Bitcoin, believe it has value. It's not the code that gives it value, right? I always say over and over, if we fork the code and call it Novocoin, it probably wouldn't be worth very much. But it's this brand, it's this idea, it's this belief system that gives it value. Well, that idea spread. There's lots of communities now. There is a basketball and baseball trading card community that is vesting value. I bought a LeBron James rookie card for $1 million, which is now worth $4 million. I bought it kind of because I love LeBron James and what he stands for, but I thought we were maybe going to get in a business where we fractionalize, and I wanted to have a piece of merchandise to fractionalize, and it just keeps going up in value. That's a community of people that say we're going to vest value. A lot comes from the fact that we got zero interest rates, right? A lot comes from the fact that Gen Z and millennials look at the state of our fiscal situation and say, hey, Grandpa, you screwed it all up. We are inheriting a planet with plastic in the rivers, with pollution galore, that's too hot to survive. And by the way, you've got enough debt that we're never going to be able to pay it back. Thanks a lot, Grandpa. And so this group is vesting value where they want to. Dogecoin is a perfect example. It's a community of people that were speculative. It was a meme. It was a joke. And they've built. And what surprised me is there's an amazing amount of resilience to these communities. They just don't go away. Yep. Right? We got a big world out there. There are 8 billion people, most of them connected some way by the internet. And so you look what the Wall Street Bets kids are doing. I met the chief meme maker. There's actually a chief meme maker of Wall Street Bets. And, their communities are, you could call them purely speculative, and there's a nihilism to them a little bit, the YOLO, the language, the bro culture. That's a community. You might not like that community. You might not think it stands for what you stand for. We also have this whole new thing called social tokens, where people who have a shared interest get together. And, the governance might give you tokens because you're moderating a Discord panel, or you're the guy on Clubhouse that's putting things together. And all of a sudden, this community gets together, and they have these tokens. They put the tokens on a decentralized exchange, and the tokens have value, and voila, my community created value. Yep. And so you've got to be open-minded. And I made a couple mistakes early on saying, well, this is the only one that should work, and this shouldn't work. And, I'm not positive it's all good, but there are very tribal, passionate communities. Like when I say something slightly negative, but anything but positive about the Doge community or the XRP army or Cardano, right? I can't figure out why Cardano trades as well as it does, other than it's got an army of retail people that will literally hit you with a baseball bat in Central Park if you say something bad about them. Yeah. And so again, that tribalism that we're seeing in our politics, we're seeing it in our investing, and there's something powerful to it. I'd like those communities to, be communities that, have the values that we want our children to have and whatnot. But I can't control, what happens out there.
Yeah, it's a fascinating time. There's no question about it. And there's certainly vaporware out there too, and communities building around vaporware. And like Mike said, there's a plus and minus to that. But what's really fascinating to me is we haven't truly seen the intersection of crypto communities and politics yet. And it's inevitable that it'll happen, because the whole concept of community and DAOs and the whole concept of libertarianism and laissez-faire and even, far left, progressivism, they all intersect. There is a huge overlap in these things, but we haven't started to see it really come to fruition in our politics yet. And we will, because those communities are so strong, to Mike's point, and they're so virile, if you want to use that word, and they're so impactful in so many ways. And it was interesting to me, going back to, Kapil, what you said earlier with Donald Trump, when he kind of talked down the Bitcoin community, who probably had a strong overlap with his support during the election. What will the impact of that be in terms of the support, or the support Republicans have? Why haven't we heard the progressives, the far left, talking about DAOs and communities and the impact on how businesses are shaped and formed and implemented? And using tokens, can a company be run better through, on Snapshot, as opposed to the way we're doing things now with the board of directors? There's so many intersection points that community and politics drive that we haven't seen yet. It's going to be really, really interesting.
That's interesting. So we talked about the power of community. We talked about someone getting beaten up with a baseball bat. I thought you two are probably the top influencer, but let's not ignore the third guy, Elon Musk. He is, someone can say he single-handedly crashed Bitcoin party. Do you guys think that one influencer can have so much impact on an entire sort of developing economy?
Listen, there's a set of circumstances, right? So manias happen around great ideas. And we were set up for a mania, right? Crypto is a great idea. This explosion of what DeFi was doing, what NFTs were doing, what stable coins were doing, all being built on the backs of things like Ethereum or Solana or Terra, happening at the same time. Institutional adoption of Bitcoin. The story was so powerful, people got carried away. Elon was part of that narrative, right? A big part of it. Elon Musk is probably the most dynamic and admired entrepreneur of our generation, right? He's got, rockets in space. He's got cars, electric cars. He's digging tunnels under cities. He's a superhero in lots of ways. So when he got involved, of course, his legion of fans were going to get thrilled. When he turned sour on it, you're going to have some reaction. And it was at the exact same time that China kind of, kicked the market in the midsection. It was already overbought. People were too long. And so we've had a big deleveraging. It's probably healthy in the long run. It's painful as can be in the short run. People who are rich, they're not as rich. But leverage has come out of the system. We're having a sell-off today. It's pretty much a deleveraged sell-off, and it's not nearly as panicky. There's liquidity in the markets. Volatility isn't spiking. We will rebase. There's an amazing technology. There's amazing adoption of this technology that's happening worldwide, and we will head back up over time. These things don't happen overnight. I always say when Humpty Dumpty, falls off the wall, you don't put them back together in a day, right? It takes.
Mark, any quick thought on that? We have less than 1 minute.
I went through the internet, stock boom and bust, and it's the exact same thing. People would get excited and stock prices would go up 10%, 20%, 30%. Somebody would write a bad report and they'd crash 20, 30, 40%. But, we all eat, sleep, and drink and thrive with the internet, and there's going to be winners and there's going to be losers. And to Mike's point, a lot of this is very, very healthy because it pushes out the vaporware and it allows stronger companies to get stronger.
Awesome. Well, with that, I really want to thank you both on behalf of Crypto Connection, TAP, Global DCA. Thank you again for such an entertaining conversation. And
Thanks
let's all enjoy the rest of the
Thanks, guys.
Take
Appreciate
care.
it.